I'm the inspiration, got my what it's doing.
Peace, peace, peace.
Peace, peace.
You can start up whenever you want. I think I made you the co-host, so you should be able to share.
Okay, bet. All right, well, I appreciate everybody for being here. Yeah, this is our full moon crypto calls, and we normally host these calls around the full moon um, every month, and that's because the full moon normally has a lot of price volatility. When we think about the moon, it has a big influence on our emotions. Like if you, for example, if you look at the hospitals, crime rates, they're normally more higher during the full moon times, and the tides are higher. And we've noticed that the markets, like not even just crypto, a lot of markets normally have more volatility during the full moon. So I think it's just a interesting time, really good, cool time to just put our eyes on the market, see what's going on, and see how we could, benefit from these tools we got. All right. So, with that being said, y'all can answer in the chat if y'all would like. Let me actually see. Yeah, how many people in here like have crypto experience? Like, how many people have purchased crypto before? Who've traded it? Who've done like DeFi, like if you've just done anything crypto related, you know what I'm saying? You can put it in the chat, just say yes or I have. Or if you've done nothing, you can just say nothing. I just want to get a quick gauge, see where the people are at, you know. Okay, we got a yes. Okay, okay. Okay, so pretty much everybody's done something. Done something. All right, cool. Well, even if you haven't done anything, it's okay. It is okay because that's what we're here to do, to show you all real tools and real like fundamentals that can help you navigate this crypto space. And the person that I've learned from a lot, his name is Chicago Crypto Bully. He has given out a lot of free information, and basically, like me and my co-hosts are just taking some of that information and providing it, sharing it with more people, and expounding on the information as well. And one thing that he said that really stuck with me, he said, if you want to really master the crypto space, hold on, I'm telling somebody they're trying to join. Just send them a text real quick. Okay, if you really want to have mastery of this space, the three pillars in my from his perspective are understanding technical analysis. That's number one. And all technical analysis is being able to read the charts and make a prediction based off of what is going on in the charts. Now, I'm gonna be honest. I've been in crypto for like since 2018, and I was very against reading the charts. I was like, hell no, bro. I'm not about to be looking at my computer all day reading these dang charts. No, I'm not doing it. But to be honest, there are levels to reading the charts. You don't have to be looking at the computer all day and reading the charts. You can look at your computer once a week and read the chart, once a month even if you want to. You know what I'm saying? So, or you can do it every day, which would be a day trader. So I was not aware of that. So just letting y'all know. I know technical analysis kind of scares some people, but in actuality, it doesn't have to be you glued to your computer all day. So that's the first principle. The second principle is self banking. Now, this is very, very important because it allows you to have full custody and responsibility of your finances. So when we put our money into JP Morgan and into Bank of America, we are giving them 100% access to our funds. And they're actually loaning out our money and making money on our money and paying us hardly anything. Actually, you're really not getting paid anything because you're getting charged that monthly service fee. So you're really not making any money from having your stuff in their account. You know what I'm saying? But with DeFi, which stands for decentralized finance, there are tools that allow you to be your own banker where you can collect interest on your own money and it's verified that no entity is touching your funds. No entity is touching your funds at all. You can because if it was, it would be on the blockchain. You know what I'm saying? So you can collect that interest. You can collect much higher interest. I'm talking about up to 5 to 7% interest on your money without the use of a credit check, a government check, a driver's license, nothing. Now, you tell me any traditional bank that will give you 5% interest on your money without knowing any information on you. Tell me when you find that out. I want to know. I don't think it exists, but tell me if you can ever find that. And then the last pillar is uh, the last pillar is passive income or what's called yield farming. And yield farming basically allows your say for example you make some you want to change you want to some of that interest that you collected from your DeFi account. So say you put $1,000 in, and at the end of the year you got $50 now because you made 5% of that. You can actually put that $50 in a passive income pool where you can generate profit off just parking your money in one place, which is actually going to generate you more money than the actual interest you're collecting off banking. So it's basically like what some people call money Legos. So the point of these calls is to basically get our people to have a fundamental understanding of those three principles. Like, I'm not just talking about buy Bitcoin, it's going to go up, buy Ethereum, buy XRP. It's much deeper than just buying some coins, y'all. I'm not still buy the coins. Definitely you want to buy the coins, but it's much deeper than that. You know what I'm saying? And it's really not that complicated. So we're simplifying it. And oh, I got some oh yeah, everybody join in. Welcome in, Miss V. Yes, yes. So yeah, like it's really not that complicated, y'all. And that's what we're here to do. And our co-host, the real Zarena, she is amazing with this stuff. She gonna blow y'all heads off with the information she has. So I'm just here to, get warm y'all up, get y'all ready, and then she gonna go from there. All right. So normally I start with the technical analysis where I just do a brief overview of how the market's looking. So I'm about to share my screen. But before I do that, say it in the chat. Do y'all have an understanding of those three pillars? Like, just to recap: self-banking, technical analysis, and passive income streams. Did that all make sense for the most part? Even if you don't completely get it, just comment yes or no if that made sense. You know what I'm saying? Let me know. Okay. Okay. Nice. 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 All right. Bet. Sounds good. Sounds good. Well, without further ado, going to do this screen share. All right. Give me 1 second. All. 'Cause. 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 ' All right. So, I know this looks like a whole bunch going on. Don't pay attention to that. We just gonna look at some some charts real quick. We're gonna look at some coins. I like to do it another way. So, give me a moment, please. My computer is not the fastest. I'm not gonna lie, y'all, but it gets the job done. It gets the job done. But this is TradingView, y'all. This is the app that I use to read the charts, to do demo trading. I would highly suggest it. It's basically the industry standard for all chart technical analysis related stuff. You know what I'm saying? So, yeah. All right. So I'm pulling up what's called my watch list, where I'm basically able to like see the coins that I'm interested in from a quick, instead of having to search it, it's like already there. So let me see. Can you pull up what I want you to pull up? All right, boom, boom. So now we're looking at Bitcoin. Okay. The king, Bitcoin is the number one value cryptocurrency in the market. Bitcoin was founded first. It was literally the first cryptocurrency. For those of y'all who don't know, it was the first. It was started after the 2008 housing market crash, and that was one of the incentives to create Bitcoin, because that basically showed that the banks are playing with people's money and giving out fraudulent loans, and it really just uh, deflated the value of everything. So Bitcoin was basically created like that was one of the reasons why it was created, but that was just like a reason like why this needs to be in the world, because the way the financial system is, it's literally just like a trap. You know what I'm saying? To just keep you in a infinite inflation system, you know, and we're still in it, to be honest. We are. So taking a look at Bitcoin right now, okay, we are still down in the last month. If y'all didn't know, Bitcoin was up to like 105, 106,000 last month, literally a month from now, November 3rd. And we had a large drop all the way down to 80K, at the very bottom. It touched that. And we have been slowly recovering from that 80,000 all the way now to 92,000. All right. So we're making our ways back up, but that does not mean that we're out the clear. Okay. We could still keep going back down. It's still a high possibility. You know what I'm saying? But Bitcoin has been having a rebound. You know what I'm saying? So if you would have bought some, that's why, you know what they say, buy the dips. You know, you bought some at 80,000 or even at 84,000 during those few days standpoint, you will be in profit right now. You know what I'm saying? I can't say in a week from now you'll be in profit, but as of right now, you are in profit. You know, so if that was you, congratulations. That's what's up. You know, one other thing I wanted to show y'all is on the week though, we are up. Well, as I was just saying, we are up 2%, because we just had the large drop around 80,000. We now at 92, not around 93. But this happened, which was highly unexpected. We had like a large just drop in the market, just out of nowhere. Like we was trading. So look, right, we were rebounding from the 84,000. We were like, oh, it's over. The crash is over. Doom, doom, it's over. It's over. Okay, we riding from 86 to 88 to hold on, let me check the chat to make sure everything is good. Okay, everything is good. All right, so we was riding out from 87 to 88 to 90. Oh, okay, we going up. But what kind of happened was once we hit that 92, almost hit 93, we had a sharp downtrend, and then we started when the prices like stay around the same level, they tend to call it trading sideways. So we were trading sideways for about I would say, what's that, like 4 days, 3, 4 days. And people were like, oh, what's going on? What's going on? Some people were like, oh, it's nothing. We're going to keep going back up. We're going to keep going back up. And then, boom, out of nowhere, drop, drop, drop. Okay. From 91,000 all the way to 83,000, 84,000. Now, if you were of the perspective that the drop was over, oh, this would have really scared you. You know what I'm saying? Like this would have scared some people. They would have been like, oh my gosh, I need to sell my Bitcoin right now because it's gonna be worth $0. You know what I'm saying? Like it really did come out of nowhere. But to be honest, this is a very volatile market. And this kind of stuff can happen at any given time. You know what I'm saying? And honestly, you just got to be prepared for when it happens, and you have to know your prices of when you want to get out or if you want to stay in. So for example, right? If you knew that the last drop that just happened with Bitcoin was at 80,000, okay? And it now comes up from 80,000, starts going up, but then it has another drop down to it's going up, so it's at 90, then it has another drop, but it only goes to 86,000. Then in the moment, right, you're thinking, oh my gosh, it's over, it's going to go over. But you have to have that discipline to be able to potentially sit in hold on, how am I saying this? You gotta have that discipline to be able to sit in a position even when it's losing money. You know what I'm saying? Because you can see the long term. Okay. Because if you were somebody who basically, as soon as the drop happened, you immediately sold your Bitcoin at 86,000 because you thought it was going to go back down. Well, look what happened a day later. It went from 86,000 back up to 93. It actually went harder. It went up farther than before. You know what I'm saying? So these are the little traps that Bitcoin does, and it's very interesting. I saw a video where someone was saying like the charts basically tell you about your emotional state. Like literally, it's like when you're looking at these charts, and if you react emotionally, the charts are going to take advantage of that. Like the market will, like it wants to take emotional people's money. You know what I'm saying? It literally wants to. And you just gotta like have that. Some people call it diamond hands, where you're just like, I'm gonna stay in it until I hit my target of where I think it might continue to go down. So what I would say is, right, this is my opinion. You can set your price of where you think you want to pull your position out wherever you want. But for me, I would say if Bitcoin goes back under 80,000, so when that drop happened, that 90,000, 91,000, all the way down. If this drop would have continued and went under 80,000, that, my opinion, then I would have been like, okay, I think I need to exit my position now because we can keep going down. We can keep going down, and who knows when the bottom will be. But as we can see right here, it never hit that 80,000. So basically, if you were to sell your position, you actually lost out on profits. You know what I'm saying? So that's just definitely something to keep in mind in space. When it comes to honestly, even when it comes to buying, in my opinion, you can say this is like a trading rule, but I would say unless you just plan to buy something and never ever sell it, if you buy something, okay, the main thing you need to know is, of course, where you bought it at. You need to know where you plan to sell it at for profit, or you need to know where you plan to sell it at for a loss. Those are the three things you need to know. Unless you plan, but if you plan to just hold it forever, then just hold it forever. You don't have to worry about that stuff. But if you're trying to get an understanding of technical analysis, then I would suggest you know those three things. Um, where you bought it at, where you plan to sell it at a profit, or where you plan to sell it at a loss. Because to sell it at a loss, you will be doing that to prevent further losses. You know what I'm saying? So in the example I presented, right? If I was to buy Bitcoin at this $80,000, or not even say just 84,000, because to be honest, it would be probably pretty difficult for somebody to time that exactly and buy 80,000. So let's just say $84,000. I bought 84,000. Okay, I'm riding the wave. I'm riding the wave up. Okay, and then we have this big drop. If I would have set my price of like where I plan to sell at a loss, I would have to really be disciplined and hold on to, like, if I would say I'm not gonna sell at a loss until Bitcoin's 80,000. You know what I'm saying? So I don't know the percentage of the loss that would be. I don't have a calculator, but what we're saying is it's a loss. You know what I'm saying? So what that basically means is you have to have the discipline to be like, even though it's dropping, even though it's looking like everything is gonna go crazy. Okay, I will not sell this Bitcoin at a loss until it goes to 80,000. Then I will. But same for the reverse. Okay, you bought that 84,000. Say you say I'm gonna sell the Bitcoin at 100,000. You know what I'm saying? You have to also have the discipline to be like, the price hit my sell point. It's time for me to sell, because you could get greedy and be like, oh, it's at 100,000. Let me see until it goes to 110,000, and then what happens is it goes to 103,000, but then it reverses back when it goes all the way back down to 80,000. But it never hit that 110,000 because you did not follow your plan, which was sell at 100,000. You know, so let me know if that's all making sense, y'all. Put some comments in the chat. Let me know if that's all making sense for real. These are very, very. It's really about discipline, y'all. It's really about discipline and understanding your emotions, because it'll get you. It'll get you. Y'all let me know.
Shoot, it smells like a bakery.
Okay. We got some yes sirs. All right. Bet. All right, so I'm gonna keep moving forward though. Next, we looking at Ethereum. Okay. Let's see what Ethereum talking about. All right. On the 1 day, Ethereum's kind of moving sideways a little bit, just bouncing up and down from that 3,200 down to $3,170. As you can see, Ethereum also had that big drop on the weekly. It was hovering, trading sideways around 3,000, then boom, drop down to 2,700, but quickly rebound. Now it's back up even stronger than 3,000. You know what I'm saying? So if you also will notice, like, a lot of the times the other coins follow Bitcoin, because you got to realize Bitcoin is right now. Let's see what it's at. Right now, Bitcoin is 59.16% of the market. So anything that's that massive is most likely going to impact the rest of the crypto space as well, especially with it being the first coin. And a lot of these other coins were basically influenced and started based off of its technology or its fundamental technology. So that's why, in my opinion, it's a great idea to understand tracking the Bitcoin charts, because not every time, but a lot of times it tells you, it gives you insights on how the other coins are going to move. All right, so we're looking at Ethereum on the 1 month. We're still down 11% on the 1 month. You know what I'm saying? It was up to dang near 3,500. We climbing our way back. Maybe, we'll see. We're gonna see what happens, because anything can happen. But as we can see, this down trend right here might have closed around that $2,700, and we just slowly making our way up. Okay, on the 6-month chart. On the 6-month chart, we're up because in July, that's when Ethereum really started pushing. It was down to 2,500. Now it shot up, almost hit 5K, and then hit that top around 4,700, and just boom, been downhill from there. Okay, so yeah, on the year to date. Well, let's look at the 1 year. Oh, not year to date. So yeah, on the 1 year, last year around this time, Ethereum was at around 4,000. So, yep, that's Ethereum. All right. Now, this is a coin called Aave. I really like Aave. It's, great coin, and also they have one of the largest DeFi platforms in the cryptocurrency space. You should all definitely check in Aave. Like this is the main platform that you can use to be a self banker. There are other platforms, but this is definitely one of the top platforms to be a self banker. So on the 1 day, also moving sideways. It seems like the resistance right now is around $200. It almost touched it, 198, and then dropped back down, 196. Dropped back down again, okay, and it's trying to make its way past 200. And I've always said this about Aave. I've said that anytime the price of Aave is under $200, like it quickly tries to get over that. Like it quickly, like I don't know, it's something about the way people who trade Aave work. Like whenever the price is under, it doesn't. What I'm basically saying is Aave does not stay under $200 for a long time. So literally, it's been about less than a month so far of Aave being under $200. And I feel like these are great times to scoop up as much of this coin as possible. Okay. Because if we look on the 6 month, it's down 21%. Less than 6 months ago, no, really like 4 months ago, Aave was at $366. Like what? You know what I'm saying? So these are steal prices right here. These under $200, these are, in my opinion, these are steal prices. On the 1 year, yeah, Aave had around a top this year of around 383. So that's easily potentially a more than 2x return. You know what I'm saying? So boom, moving forward. Let's look at the total crypto market. Now, this chart tells you what the entirety of the crypto market is looking like. All right. So right now we're at around $3.14 trillion. That's Bitcoin, Ethereum, Aave, any other coin I'm about to name. That's how much money is in the entire crypto market. Okay. So in the 1 week, coming out, breaking, I feel like this 3 trillion was like a area where it was trading sideways a little bit, had this drop, and then boom, shot up way past 3 trillion. Okay. So yeah, if y'all look right here where it was basically sideways, that was like a consolidation time, so around that 3 trillion, that was, or you can even call that a support. I'm going to get into that a little later, but that was like a consolidation support time for the crypto market. And you definitely want to pay attention to these numbers though, because, it will remind you of like, if the total crypto market goes back to 3 trillion, we might potentially have some sideways trading again, just like how we did it before. A lot of time the past has a history of repeating itself. So that's why it's very important to pay attention to these numbers in these times where these prices consolidate and where they consolidate at. Right. All right. But yeah, in the past 6 months, in the 1 month, we're down 10%. but the top right here was around $4.2 trillion, $4.22 trillion. So that was the absolute top. So we got a long way to go to get back there, and it leaves a lot of room for potential profits and expansion and whatnot. All right, 1 year, 3.62%, down 8.3%. All right, moving forward, total three. This is basically another chart I like to see, but this is all of the crypto coins besides Bitcoin and Ethereum, because Ethereum is number 2 behind Bitcoin. So, and this is only at $897 billion. So this kind of tells you what the other coins besides the big two are basically doing in the market. And I like this chart as well. You know what I'm saying? If you all do have TradingView, I would definitely suggest you add these charts to your watch list so that you can just easily access them like how I'm doing right now. Because otherwise I'll have to look them up and all that kind of stuff. And I don't have to do none of that. I'll just click on it and keep going, So total 3. And then total 2 is just all of the coins except Bitcoin, excluding Bitcoin, which is at $1.28 trillion. All right. So now we're going to go to the dominance charts. I've talked on that a little bit. Now these charts are a little different because they don't measure prices, or they don't measure the actual capital that's in the market. They measure what coin has the most percentage of the market. Okay. And a lot of people use this dominance metric as a way to determine, is the market more in favor of Bitcoin, or is it more in favor of what's called altcoins, which is anything other than Bitcoin? Anything other than Bitcoin is considered an altcoin. Ethereum is an altcoin, Aave is an altcoin, XRP is an altcoin. Anything other than Bitcoin is an altcoin. Okay. So the Bitcoin dominance right now is at 59.12%. So 59.12% of the entire crypto market is Bitcoin. So on the one, and as you can see, these numbers aren't as extreme as the others. Like it's not going to look as volatile, because it's not dealing with prices and capital. It's more dealing with who has more of a percentage of the money in the market. All right, so looking on the 1 week, it's kind of been roughly around the same for this 1 week, just trading in between this 59, 60, and 59%, just right in the middle. On the 1 month, though, we're down 2.69%, 61, topped around 61 of the month, and now it fell down to 58. But on the 6 month, so in like July, the Bitcoin market was booming. It was at 65% of the market, almost 66% of the market. That's a lot. Then came all the way down to 57%. All right. Okay, so that was around the top. But a year ago, the Bitcoin market was only at 55%. Okay, so the market is definitely, the dominance is up since the following year. All right, now, a lot of people have a saying, it's called altcoin season. And that's where like coins like Chainlink or like AVAX or even Aave, they might be at $14, $12, whatever, and then out of nowhere they just shoot up to like $50, $60, $100. Like these small coins that are only like $10, like shoot up 10x, and people really, of course, because we all want to make money, right? So everybody's anticipating this time, this altcoin season. And I look at these dominance charts to determine, are we getting towards that altcoin season or not? You know what I'm saying? So the other dominance coin, the dominance chart I look at is called Others Dominance. Now, Others talks about it is all of the coins in the market excluding the top 10. Now, I really like this chart because the top 10 coins, I believe, are like XRP, Solana, Binance, Ethereum, Cardano. So those are the coins that have like a lot of institutional money into institutional investment in. But under the top 10, those are like the smaller coins that in actuality, if you get in early, you can make much more significant gains off of compared to the top 10. Now, when this chart starts to rise, so right now it's at 7%. As we can see on the weekly, it's down 4%. It was at like 7.2%. Now it's down to 7. When this chart rises, say, look, on the 1 year, it was at 12% earlier this year. So that was what I would consider a mini altcoin season. Okay. The altcoin market was at 12%. So the altcoins were looking good. They were pumping. They were looking good. But now, as we can see, Bitcoin has taken more of the power back because, as we can see, right, 1 year from now, so on December 7th, the altcoins, the under the top 10 altcoins, the others was at 12%. While if we look at Bitcoin over here, okay, and if we look at it on the 1 year, that was down to 55%. So you notice this is an inverse relationship that we're looking at right here. Okay. The Bitcoin dominance was down, but the others dominance was up. Okay. The Bitcoin dominance was down and the others dominance was up. Others dominance at 12%. The Bitcoin was at 55%. Now let me show y'all how this translates with prices, right? So Chainlink will be a coin that is in under the top 10. So if Chainlink, this link coin right here, would be in the others dominance. Okay, it's in that pile because, as you can see, it's number 13. It's not in the top 10. It's number 13. So what was Chainlink looking like 1 year ago? Chainlink was at $25, almost $30 1 year ago. Much lower than what it is right now, or much higher than what it is right now. We're at $14.77. You know what I'm saying? So that is how you can use the others dominance charts to determine, like, are we in a time where the under top 10 coins are going to start rising, or are we in a time where they're cheap so that we can start buying them up? Because in my opinion right now, these others dominance coins are very, very cheap. Like $14 is nothing compared to what it could be. You know what I'm saying? $29. And as I said, I feel like this is a mini altcoin season, this 2025 push. So who knows what it could do. Next, we're going to look at AVAX. It's funny. I feel like these two coins have like a little bit of an inverse relationship, especially because AVAX is red and Chainlink is blue, right? It kind of reminds me of the red and the blue pill. And I just picked this up, right? So Chainlink, their logo has 6 points. 1, 2, 3, 4, 5, 6. While AVAX, their logo is a triangle. 1, 2, 3. So we got like a 3 and a 6 energy. And, it's just very interesting. Chainlink normally has been higher. Like it has more money, more capital into it. For example, Chainlink is number 13. While Avalanche is number 21, but there was a time where they were like neck and neck. Like Chainlink might be number 13, and Avalanche might be number 15. Avalanche, for the most part, doesn't go higher than Chainlink, but it's like it tries. Like they stick real close together. From what I've experienced, I'm not saying it's gonna always be like that, but from the year right now, I say me watching these coins very closely, they've been kind of neck and neck with each other. And even their prices are very similar. Avalanche is at $14.82. Chainlink's at $14.78. So saying that to say, in my opinion, you can look at these coins and maybe see if they have a relationship. I have my opinions on that, but you can see for yourself, see how y'all think these coins might interact with each other. But yes, Avalanche is also within that others dominance chart. As we can see 1 year ago, boom, man, Avalanche is at $51, bruh. $54 1 year ago, down 70% at $14, man. I'm gonna be honest, bro. I'm definitely getting some AVAX right now. Like, what? If we get even close to that $50, man, jeez, that's nice. That's nice. So AVAX, right? Great coin, great coin. They have a lot of use cases in the world as well. You should definitely check in with them. Well, what else we got? We got the Ethereum dominance. That's just another dominance chart that also is similar to Bitcoin, but as we can see, Ethereum is at 12% of the market, 12.29% of the market. Okay. And XRP, a lot of people like XRP. XRP is cool to me. It's not my favorite, but a lot of people like it because it's very cheap and they think it's gonna get super pricey like how Bitcoin is. Maybe it'll happen, maybe not. Who knows? But XRP, we see how that's doing. It's kind of trading sideways a little bit from $2.45 to down from that downtrend 187. So 218, 220. It's ranging around this $2.25 down to $2 level. You know what I'm saying? It really isn't getting hit as hard as some of these other coins, but it's doing its thing. It's rocking out. Had a high 6 months ago of around $3.55, and now it's down to $2.19. So that's not bad. We got Solana. Okay, I'm gonna look at these two more. We got Solana on the 1 week. It's down what's up 1.48%. Also had that huge drop. You know what I'm saying? Went all the way to 123. Now it's pushing up 145 on the 6 month. Within the 6 month around September, it had a high of around $247. Now had a low around 126. Now pushing to 145. But in the past year, the high was around $262. All right. And then lastly, I'm gonna chat real quick. I'm gonna see if people are saying something. Okay, I see the altcoin season. Okay. All right. So Cardano, last one I'm gonna look at right now. So in the 1 week, okay, Cardano's kind of pushing. It's kind of pushing. In the 1 week, it's up 3.4%. Okay, 40 cent. Now it's at 45. Okay, in the last 6 months, it's definitely been down heavy. Was almost at $1. Hit that $1.99 right there and just came down. You know what I'm saying? So that would be a support. I mean, no, not support, a resistance, because it touched it, but the market resisted it. So it immediately shot down. And it's been downhill ever since. Downhill. 31% in the past 6 months. And in the past year, a year ago, Cardano was at $1.22. We down 62% all the way from there. Boom. All right. So yeah, that's that is the, you know what I'm saying, the market analysis right there. I do want to just do a brief check or a brief understanding of what's called support and resistance. I went over this in the last class, but it's very, very important, and it's a very easy way to just have a general understanding of how of technical analysis, because technical analysis can get super, super complicated when you start talking about different indicators and all that stuff. But in my opinion, you cannot go wrong with this support and resistance. You really cannot go wrong with it. All right. So I'm just going to do a brief demonstration on how to identify support and resistance. So as of right now, I pulled up a Bitcoin chart. And I'm going to look at Bitcoin on the I think I already had some support and resistance already drawn out. Yeah, I did. Well, boom. Okay, that's cool. So, okay, let me get rid of some of this stuff because I don't want it to be. I don't want y'all to even see all that. I just want us to see this. All right, boom. So, an easy way to figure out support and resistance is to see how many times does the price touch a certain number. All right. So the first resistance or the first support I drew was right here at 73,000. Okay. So this is going all the way back to March of 2024. Okay. No, yeah. Yeah, March of 2024. This is going all the way back from there. Okay. As we can see, we touched that 73,000 once, twice, almost those two times, but once, twice, and then a third time. And then after that third time, we boom shot right past it. That was when Donald Trump got elected and everybody was hyped because we thought he was going to pump the market and hit that 100K. Boom, hit that 100K and then came back down. But look exactly what we did. We came back down exactly at the 73,000 mark. So for example, right? If you in March of 2020, no, let's say November of 2024, if you would have drew your support in your resistance line, because technically this would be a resistance right here. The price hit it 1, 2, almost 3 and 4, 1, 2, 3 times, right? You really only need a target to the price to hit a level twice to draw that support line. But 3 is higher confirmation. You know what I'm saying? So boom, if in November you would have drawn that line when the market shot up from the Donald Trump pump to 100K and then came back down, you would have an accurate depiction of where you think the market is going to have a bounce from. Okay, because literally you marked it out almost 6 months before it happened. So it's low key a way like you can kind of predict the future with this support and resistance stuff. Like it's really like that simple. And this tool can make you a lot of money if you really know how to use it. You know what I'm saying? So this is what people call a classic case of support or resistance flips to support, or it can work the opposite way. Support flips into resistance. So what happened is, all right, in that March time frame, this was resistance. It kept hitting it, but bouncing down. It's hitting it and bouncing down, hitting it and bouncing down. But in November, when Trump got elected, it did not bounce down. It shot right past and went boom, all the way up to 100,000. Okay. But it stopped at 109,000, stopped around there and came way back down to exactly that $73,000. So back here in March of 2024, this was resistance. But almost a year later, this 73,000 is now support. Okay. Resistance over here, support over there. All right. So now over here, same thing happens, right? We shot past that 73,000 and we topped at around 109,000. Okay. Came back down, hit that support 73, then shot right back up. And then started trading sideways a little bit around that 109, 110,000. So we got the target hit 1, 2, 3, 4, around 4 times. But then we shot up, made a new high, which is around 123,000. Okay, so now I marked a new resistance because we hit that high and then bounced back down. So now it's a new resistance. Okay, we did that 1, 2, and basically around 3 times. It went a little past it, but you know what I'm saying. But okay. But before it hit that 3rd time, we bounced right back down again and came to around that 109,000. So another example of support, of resistance turns into support. Because in May of 2025, this 109,000 was resistance. Every time the price hit that 109,000, it came down. It came down to 100,000. It hit again. It came back down to 100,000. But on that third time, it hit that 109,000 and shot right back up to 123,000. Okay? Shot right back up to that 123,000. All right? And then it did it again. It almost came down to that 109 again, but then shot back up to 123. Then, now, example, that 109, which was over here resistance, is now a support because it used that as like a launch pad to go back up again. And then same thing happened again. Hit it around 109,000 again. But now this 109,000 is now a resistance again because the price dropped past that 109,000. Went down, went down, went down, went down. It didn't hit 73,000, but it did hit around 83. It hit around 80,000. So literally we're caught in the middle, in between this $73,000 and $109,000 level. So if you were using this support and resistance as your technical analysis, you would basically be like, okay, most likely Bitcoin is going to have a bottom. It's going to bottom out or around this 73,000, or it's going to have a top at around this 109,000. But if it goes past this 109,000, the next top it could find is around 123,000. You know what I'm saying? So, yeah. So, saying all that to say, right? If we have another downtrend where we go from this 93,000, we go all the way back down to 70, get down, we keep going, we go to 90,000, then we go to 80,000. Based off of your support and resistance, you will make your prediction that the drop will stop around 73,000 because it happened back here. A lot of times the past repeats itself. It happened back here. It just might happen again. But if we keep going up, okay, we go from 93,000 to 100,000 to 105,000, where we might stop potentially, where the Bitcoin price might make a top is at $109,000, where it might hit that level and reject. But if it continues to go past 109,000, then the next level will be 123,000, meaning that this 109,000 will flip from resistance to support. Resistance to support. And now the new resistance will be 123,000. So I would encourage you all, if you want to have a fundamental technical analysis, just pull up a blank chart. I don't even think you need TradingView. You could just like freaking print out a chart. Like go to Google and be like, give me Apple chart or any stock, any crypto chart. You really don't even need this TradingView tool. And you can print it out on your printer and just draw the line, just like how I did. I just drew the line digitally. You just draw the line. I would highly suggest that be like a homework assignment for everyone here who actually wants to have a fundamental understanding of technical analysis. Just draw out the support and resistance. I'm telling you, it will definitely ease your mind when it comes to where you think prices might go in this very volatile, very interesting market. And I could definitely draw more support and resistances if I want. Like I could draw another one around this 94,000, but I'm just going to stick with these three right here. You know what I'm saying? So yeah. I just like to hone in on this. I really like to hone in on this because when I took my technical analysis class, this was the first thing that we were taught. And I was kind of like, this is very simple. Like, I'm like, when are we going to get to the other stuff like the Fibonacci and like the RSI and all that stuff? And to be honest, when I first heard it, I kind of was like, oh, okay. I mean, I guess it's cool and all, but nah, bro, like this is it. This is it right here. You know, this is really it. So yeah. But let me know how y'all feel about that. Let me know how y'all feel about the support and resistance. If y'all have an understanding, put some comments in the chat. Let me know how y'all feel about support and resistance. I would love to hear your feedback. And let me know if you want to try it for yourself. You know what I'm saying? Let me know if you want to, You know what we could do, right? We could do this before I get off. We can open the floor up to one person who wants to talk, who wants to request a coin, right? Right. We can request any coin, and we can just draw the support and resistance right now. If anybody is brave enough to step up to the plate, okay? Just you can unmute yourself, say, let's look at this coin. And then me and you, we're gonna go through the support and resistance and see where we think it's at. All right? So let me know if y'all want to do it. Let me know if y'all want to do it. Don't be shy. Don't be shy. Don't be shy.
Coin quant. Hey everybody. What about the coin quant?
All right. All right. Let's do it. Let's do it. So let me look into it. Okay. Quant. Quant. Okay. Quant. I'm assuming that this one is it. Okay, okay. This is the Coinbase chart. All right, all right. So let's look at it. So I'm gonna need some participation. All right. So we're looking at it right now on the daily chart, and we're bringing it all the way out until, let's say, July of 2024. Let's just say around there, and I can full screen my screen also, so you can uh, see it a little more. Actually, I don't know if that helped. Actually, did it help? Okay, it helped a little bit. So, yeah, so who said quant, if you can see my screen clearly, could you tell me where you think, and if you need me to zoom in, let me know. I can zoom in some. Could you give me one support and resistance that you think you see right now? And if you need me to zoom in some more, let me know. Let me know.
Let me see. I'm on my phone, so I'm trying to see.
Okay, okay, I got
I'm
you.
on my phone. I'm at work, so I can't tell me I'm on my phone. Um,
I'm gonna zoom in a little.
yeah.
I see one. I see one. I don't know if you see
I
it.
can't. Yeah. Yeah. I can't blow my phone up no more. I do see where that line is. That one, two, that third line is. Yeah, right there. Where that where you had that
Like,
Mm-hmm.
like around
Right
right here.
there. Yeah, that's when you went. Yeah. Mm-hmm.
Yeah, yeah. Okay, okay. I see that. Yeah, I see that. I wasn't even looking at
Mm-hmm.
that one, but I definitely see that one. Okay, bet,
Mm-hmm.
bet, bet. So I'm gonna get my horizontal drawing tool right here, and I'm just gonna mark that off. Well, I'm gonna draw it back here. Yeah, basically like around right here.
Mm-hmm.
Yeah, yeah. So boom, it hit it 3 times. Okay, that's $161. We hit it right there in July and June. It hit it again. Oh, hold on. Hit it again in top of January 2023. Uh, it also hit it again in the top of January, like December 2025. So yeah, that 162. That's like a high resistance, like a high level resistance. So I definitely agree with that one. You really only need to hit it twice to be a resistance or a support. I would suggest 3 times just for more confirmation. But yeah, okay, that's great. That's great. Does anyone else want to, I know you're on your phone, so I know it might be hard for you to look at the rest of the whole chart, but if anyone else wants to jump in and point out another support or resistance, feel free to do so. Feel free to jump in. But that was very good. Very good. Nobody? Anybody? One more. We got a resistance. Let's see if we can get a support.
So don't we have another one where that see how you got that go right there? Go down a little bit more. Yeah, right
Uh-huh.
there. Don't we? Right in there.
Yeah, that's one. All right, bet. And interestingly enough, that's like the current price of the coin right now. That's why you see that green line. That's like the current price. But it is definitely a support. So yeah, let's draw it out. Okay. So yeah, that $95 definitely a support. Hit it 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. A bunch of times. It hit a bunch of
Mm-hmm.
times. You know what I'm saying? So
Mm-hmm.
that's like that looks like a middle support. You know what I'm saying? Or a middle resistance if you want to see it that way. Now, for one more, I'm seeing one more. If we can just get this bottom support, somebody want to say where that one is? We got one more. Tell me where y'all looking at. And it can be the same person or if someone different. Just let me know.
All right, I have to at work. I have to go back. So go down to your take that. Yeah, go down. Go down.
Uh-huh.
Right in there. Write it up.
Right there.
Up in there. Right there.
Yep.
Right there.
Yep.
Mm-hmm.
Exactly.
Mm-hmm.
We're gonna draw another line.
Mm-hmm.
Boom, right. Basically, yep, right there.
Mm-hmm.
That's another one. So that's that $55 area, right? Hit it. 1, 2, 3, 4, 5, almost 6, 5 times. So with Quant, with this crypto coin called Quant, we have identified 3 support or resistances, right? The first one is $55. Okay. So the second excuse me, I gotta sneeze, y'all. Okay, it didn't come yet. It might come later. So first, the support is $55. That's the bare support, and this goes all the way back to July of 2022. All right. So, okay, where currently the price is at $95.76. If Quant continues to go down, if it continues to go down under this $95.76, and maybe do a downtrend going to 80 or something like that, based off of our support, we can make a prediction that that it will have a rebound or a bounce around $55, which is that support that we have just identified. Okay. Now, Quant is currently at our resistance level, which that we identified, which hit a lot of points, which is that $95.80. It's literally there right now. So as long as Quant can stay above this $95.80, we can make a prediction that at some point, we can't say when it's going to happen, but we can say it's going to happen, because that's the thing, right? These tools do not, there is not a crystal ball. It doesn't tell us exactly when it's going to happen, but it can tell us that it will happen. It might take a month, it might take a year, it might take 2 years. You know what I'm saying? But it will happen based off of the previous history. Okay, so that basically, if we continue to go up, the next target where we might have a rejection or a resistance is around that $161. All right, so that's basically what I would say if I was solely using support and resistance as my technical analysis to buy or trade or whatever. I would look at, if I had to buy in right now and we keep going up, I'm looking to maybe get out of my position or see a reversal in the trend around $161. Right? And then the flip side, if we go down from this $95, maybe see a reversal from a downward trend to an uptrend around $55. So, yeah, that's basically that. Do we have one more coin? Do we have one more coin anybody want to look at before I hand it off? Y'all let me know. Y'all one more?
Can we get a coin called Dash? DASH.
Dash. Okay, Dash. Dash has been around for a minute. I remember Dash. Yeah, Dash is an OG. Okay, Dash. This is the one, right? Dash, right? DASH.
Yeah, CASH. I'm at work. I really can see.
Okay. All right. I'm gonna zoom in some. Hold on. So Dash just had a huge pump recently and came down fast though. But it did just have a huge pump. Okay, so going all the way back to July 2022. This okay, before I say it, anybody, if we have a new person who wants to say identify as support and resistance, let us know. Let us know. The floor is yours to let us know if you can see the support and resistance on this coin called Dash. Let us know. Currently at $49.34, y'all. $49.34. Nope. Let me check the chat. Anybody saying something in the chat? Sorry, Naiba, turn on my mic. Oh, someone said Honeycoin. Okay. We can look into Honeycoin next. I'll see if I can find it. All right, so I'll do a quick support real quick. Literally, actually, the price we're at right now looks like a support. So I'm going to just draw that line. Hold on, y'all. I'm trying to get it exact. My bad. Okay. Okay, boom. So, yep, at $44, that looks like a nice little support. So it hit it several times. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, a bunch of times. So it's pretty interesting how we're hovering around the support of the coin right now. So meaning that we're in like the perfect low key. I see support and resistances as the perfect buy-in opportunities because we know that a potential trend reversal can happen from this point. Even if you're doing a short position, like these, when these coins hit your support and resistance, like this is go time. You know what I'm saying? So that's why it's great to always have a little bit of cash to the side, so that because you never know when these coins are going to hit your support and resistance, but when they do, you could be ready and you could make your entries. You know what I'm saying? So yeah, this $44 is looking really good. Either Dash can bounce off the 44 and continue to go up, which is definitely possible, or I'll go ahead and draw the if we have another. No, I'll just go ahead and do it. If we have so for the next support or resistance, no, because you gotta realize I'd be confused, but it's kind of like they're the same thing. It just depends on your perspective. Support and resistance are kind of the same thing. Just depends on your perspective. So in my right here, going down from July 2024, the next support is around this $22 range. Yeah, around that $20, $21, $22. So It hit it several times, several times around there. So saying that to say, as long as Dash can stay above this $44, it's looking up. I mean, it might go back up to $100, $150 again. You know what I'm saying? Or it can hit this other resistance that we had back here, which was around $77. So I love it when the coin that we're focusing on is exactly at our support and resistance. That's pretty cool. That's pretty cool. Meaning that you got an opportunity to make some appreciations until it hits its next resistance level. Or even if you're doing a short, if Dash goes under $44, you might be able to not capitalize on a nice downtrend going towards $20 or $21. It might not go all the way to 21. It might go a little higher above it, or it could go lower. We never know. But as all we can do is go off of past data. So with that being said, I'm gonna go ahead and wrap up my segment. Thank you all for being a part of that. This was very fun. We did say we're gonna look at Honeycoin. Let me see if I can even. Okay, Honeycoin, Honey USD. Okay. God dang, this coin is looking down, very down. I ain't even gonna cap. Oh my gosh. So, oh gosh. I'm gonna keep it a buck. This chart is looking terrible. Not saying Honeycoin is bad, but this chart is looking terrible because there's not many. First of all, there's not a lot of history to go off of. The coin looks like it started around July of 2024, and I just don't got a lot to go off of. I could do a little resistance right there around this 9 cent, and then say another one also around here around this 5 cent. But the bottom, we don't know. The bottom is not done yet. It could go under 1 cent. It could go to 0.01 cent. Because even if I draw this support, it's not much data to prove that this 1 cent is the exact bottom. It's just not that much there. Not saying that you should not invest in Honeycoin. I'm not saying that, but this like I told y'all, when I draw support and resistance, I like to do it based off of multiple points hits. And right now on this, I don't really trust this support because I only got it hitting this 1 cent or around this bottom one time. So who knows? It could go under this. But these two support and resistances, they feel a little more trustworthy because as you see, it hit that 5 cent 1, 2, 3, 4, 5, 6, 7, several times. So saying that to say, the next resistance for sure for Honeycoin is 5 cent. So hey, if it hits up to 5 cent from where it's at right now, that's pretty nice. That's pretty nice. I ain't gonna lie, But I don't know if the bottom is in. I can't tell based off of this support. I don't really trust this support, because there's just not a lot of history for me to go off of. It could definitely go under, or it could hit it again. It could hit this support again, which is definitely very, very possible as well. So, yeah. And then if I just want to be even more extra, another support is around this 3 cent. But yep. Hope that helps. Y'all. Yeah, that's how I'm feeling about the Honeycoin, man. But hey, That's it, y'all. That's it, y'all. But I'm gonna go ahead and pass the mic. Pass the mic. I'm gonna stop sharing my screen. And this has been fun. This has been fun. All right, y'all. Let me know. Let me know if this made sense to y'all. If y'all had a good understanding of this, and just let me know your thoughts. You can put them in the chat. All that good stuff. Yeah. Okay. Cool. Cool.
Peace.
Hey. Hey.
How do I share my screen? I always forget. Am I sharing?
Yep. Yep. We see you.
Okay. Let me take this stuff off. I was looking at the gold chart earlier. I was trying to figure out if you guys can ask your favorite chat. But the biggest sort of spike in gold was when we got off the gold standard, or they closed the gold window rather, in 1970. And that was a 400% sort of move. I was trying to see what that would be from where the kind of bottom of gold, about 20. Oh wait, I'm too far back. There we go, 2023, somewhere around here, like 1500. Yeah. And the reason I was doing this really was just because I think gold is going to 10K. In the next decade, there's going to be a serious repricing event. Not just gold, silver, all precious metals, anything of real value, cattle, land. Yeah, because never forget that's kind of what inflation. That is what inflation is. That's what makes things go up. Um, but
Like
yeah,
real
so
things are much more valuable than cash, and the value of cash goes down. Or real things goes up in
goes up.
comparison to cash.
Yep, exactly. So people want home prices to go down, but they want stock prices to go up, which doesn't make sense because if there's inflation, it's going to inflate everything. But yeah, inflation can be a powerful tool if you know how to use it to your advantage. Like if we know that they have a fiat money printing scheme going on, if you want to see it as a fraud or not a fraud, it's more of deceptive practices and you know, not giving full disclosure. Definitely some fraud mixed in though. But like I said, if we know this, that it's like a fiat printing money machine, it's fake money, it's not backed by anything, all of this stuff, right? We shouldn't want the dollars. We should be figuring out what else do we want. What's better? What's a better alternative? And Bitcoin is one of those. ETH can be one of those for you. Gold, silver can be one of those. Like even silver. Any of you guys remember back in 2020 during the panorama when that jaunt was like 14 an ounce? Now it's like 60? Come on. Yeah, down here. Anybody who bought silver down here is up quadruples like they bought a meme coin. So just food for thought. There's always a bull market somewhere. even if Bitcoin and crypto is, a little more on the down. But let's see. Kind of just wanna quickly did a kind of a good analysis for us today. I've really just been looking at Bitcoin on a monthly chart, and I just kind of wanted to show you guys that too. Um, get rid of these fibs. We don't need those, just the moving averages. But just looking at it a monthly from a levels perspective or support and resistance, I don't know, it still looks good to me. I'm not sure what all the panic is about.
Now, I wanted to ask you though, on the monthly, how do you feel about that red MACD candlestick? I saw an article, a TradingView article, where someone was like nervous about that. What are your thoughts on that red MACD candle?
I'm not nervous really at all. Um, yeah, even because you got to think as well. This is on a monthly, so like if we go to let's do like a 3 day. On the 3 day, you can see that right we're moving out of the dark red into the light pink on the MACD, and you can see that it's sort of making a little bit of a bottom there. So the monthly, that red candle is constructive. It's definitely constructive. We could see more downside, or we could just see more chop in between, like uh just like some quick eyeball levels. Just oop, here and here. Oh, why is it dotted? Right, we can kind of just see a chop between that. That's just literally quick levels on a monthly. Um, and that could bring about, more of that red on that MACD. But yeah, I'm not necessarily bearish. Like on the short term, yeah, but I mean, as long as this thing is holding, where is it at? This level here that I actually drew as the level, which you can see touched in March 24, right? That was resistance, flips, become support in April 25, right? So as long as this April 25 support holds, I'm not really worried. Um, cheaper Bitcoin goes just means I get more sats. Uh,
Agreed.
yeah.
Yeah.
Also, one Bitcoin is one Bitcoin. So that's the other thing. I'm like, are these people Bitcoiners or are they no coiners? I'm confused. Because one Bitcoin is one Bitcoin. Or maybe they're traders, you know what I'm saying? If you're trading, that's something different. I don't really navigate Bitcoin from a trading perspective. Not
Mm-hmm.
like on a serious note. I take some trades here and there because I am watching the charts
Mm-hmm.
when an opportunity presents, but that's like not my main thing. Buying Bitcoin is.
Yep.
So yeah.
So with MACD, right? And is MACD essentially like because it's called moving averages, convergence, divergence? Is that basically how the moving averages work in tandem with each other? Because I see you have the moving averages, but then
Mm-hmm.
like I'm looking at like the relationship between the moving averages and the MACD. You know what I'm saying? Just if you could don't mind like giving the understanding of like how those two work together. You know?
Yeah. So what I always like to do is hit up Perplexity. Okay, let's do explain MACD. Oh, dang, Perplexity working hard tonight. Okay, here we go. Okay, this is really just what I wanted was this first line. Was it is built from 3 components calculated from price, usually the closing price. So this is really the main line I wanted to show you guys, is that it's built from 3 components calculated from price, right? And like it says, usually closing price, whether you take, let's just go to like a daily real quick. Whether you take the open price, right? Like on today's candle, the open is up here, 93.4, or the close, oh, well, it didn't close yet, so let's take yesterday. Yesterday opened up at 91.3 and closed at 93.4. So that difference of whether you're taking the open of the close, that matters as well. But like I said, the main thing I just wanted to show you guys is that it's taking the price together. I mean, that it's taking, those 3 components calculated from price. That's the first thing I wanted to show you guys. Because like a moving average, so I think it's the green. Yeah, the green is an 8. Let me just zoom in. You guys can see that. So it's taking data from the last 8 days and turning it into a line, basically, an average that can be plotted, right? 200 days, taking the average of the last 200 days, same thing. Now, does it have the other part? Doesn't have what I wanted it to say. Okay, let's just look at this part. Then I'll explain it. So MACD line crossing above the signal line as a potential buy signal, especially if below 0, signal of momentum turning up. Actually, I'm not even gonna read that. I feel like that might complicate it. The main thing I want you guys to get though is that the MACD is taking 3 components in order to track price momentum, right? And the relation to the moving averages is it's kind of like pushing them together just to show you the momentum and not the price, if that makes sense. Because it's still taking all of that price data in between. Like if I say I want an 8-day moving average, I want 8 days worth of data, or a 20-day, that's 20 days worth of data to give me a moving average line. And instead of giving me a price, the MACD just gives you, it's a momentum indicator, right? So that's kind of how I would explain it, is that it's taking that same price data, but turning it into something that shows you the momentum instead of just price, but momentum.
That makes a lot of sense using that momentum word because, like, the momentum can build up or it can build down.
Right.
So, yeah.
Right, exactly. Yep. But that was all I really wanted to show you guys with Bitcoin. I was also watching Total. Oh, this is a messy one. It's a little better. Let me take guppies off. I feel like that'll help. It's less busy. But I was watching this. This is a Fib fan as well, if you're wondering what this particular situation is. But something I found interesting was that right down to this, I think this is the 0.5 Fib here. You can see it wicked right down to that, which I had been watching this zone. And then expecting sort of a pop back and kind of looking to see is that going to be resistance here, or like is it going to be a pop and fade, or a pop and pop in the next, what are we on, 3 days left on this week, or 4 days, so next 2 weeks, this week and the next week. Kind of see, is it just gonna, like I said, pop and fade, or like pop and pop above this. Pop and fade would kind of just go more to the thesis of that it's going to just chop for right now, and less of a pump. But definitely Q1 seems to be, when things will perhaps start moving. The other thing I always watch is the ISM, which is the global, or not the global. This is the business cycle index. Business cycle index sub 50 is a period of contraction. Where's, let me zoom out for you guys. And then above, that's where the fun stuff starts to happen as far as markets going bananas. Yeah, that was all I really had as far as charts to show you guys.
I wanted to ask you something though, about the moon phases.
Yeah.
So at one point we were talking offline, and we were talking about how sometimes the energy of the moon phases like flip. So from my analysis, tracking the moon phases during the full moon, normally the prices are down, but within a few days, either after or before the full moon, they have a large shoot up because the market is so red that
Mm-hmm.
within a few days of the full moon, they shoot back up. And during the new moon, it's the opposite. Normally, the prices are very high, and within a few days, either before or after, the prices tend to drop. Now, if you notice, like the last new moon we had, which I believe was like on the 24th or 23rd of November,
Mm-hmm.
that's when prices were at like, that's when Bitcoin was at like 80,000, 84,000, and we see it's shot up since that 84,000. We're at this 93,000. So I'm like, that's the opposite of normally how the new moon normally works. Normally during the new moon, we're having a drop in prices, but this time it had an uphill uptick in prices. But
Yeah.
and then we're looking at the full moon right now. The full moon, I believe, is tomorrow, or in on either tomorrow or Friday. And are we going to have another pump back up, or has it flipped? You know what I'm saying? So I would love
Yeah.
to know your thoughts on that. What you think about that?
Um. Yeah. Like kind of like I was telling you, Bitcoin is more correlated than like S&P 500 with the moon,
Okay.
and that means then more. It's like a 51% probability
Hmm.
versus like a 46 for the S&P.
Hmm.
As far as percentage of correlation with the moon phases, where full moon, pump, new moon, dump, just
Hmm.
generally speaking.
Hmm.
So yeah, kind of like I was telling you, sometimes it just flips because that's just the way the odds works. That's the way the math works.
Hmm.
And what I've noticed is sometimes it happens when there's the most hive mind of things going one way,
Mm-hmm.
they go another. It's not always that, but sometimes it is that.
Mm-hmm.
Um, yeah, but mainly just using it with you know, levels, moving averages are gonna be your top things in technical analysis. Levels, moving averages. Levels are support and resistance. Support and resistance. Support and resistance. Those are the main things. You could literally just, do whatever you need to do off support and resistance. No trend lines, no indicators, no nothing. Really just candles, honestly. But yeah, knowing support and resistance, moving averages, and then you can, you know, throw in whatever you see from that and add whatever you're seeing from the moon phases. And that will kind of give you your convergence of, okay, well, Bitcoin is in between these levels. So, it has to fall somewhere because price is sticky. Price likes to be where it likes to be?
Mm-hmm.
Um, so
Mm-hmm.
yeah, that's just kind of how I use it. I use it in convergence with, like I said, levels, moving averages. I don't just use it by itself.
Yeah, I feel that. I'm just curious to see if, like, what if we get a full moon dump? Just like how we had a new moon pump, we get a full moon dump, and I'm like, is this the beginning? Because from my experience of tracking the full moon, new moon all the way since like April of this year, it's pretty much been that like ever like since it kind of bottomed down in April, it's been like full moon pump, new moon dump, full moon pump, new moon dump, dang near every month. And I'm
Yep.
like, oh, is this the time? And astrologically, which is very interesting to me, April is Taurus season. And right now, we just had entered Scorpio season. And Scorpio, a lot of people see Scorpio as like a sign that deals with change and just like it's very watery, it's very fluid, and like you just don't know what a Scorpio is gonna do. They're secretive, like you really can't predict them. And I'm like, we got a few more days to see how this full moon is going to play out, but I'm just kind of curious to see, is this the flippening? Like now for the next maybe 6 months, it might be full moon dump, new moon pump, full moon dump, new moon pump. You know what I'm saying? Just throwing that out there because it could be interesting. So
Yeah.
yeah,
It's definitely possible that we're in a reversal period of that. That's why I said, like I said, just always using it in confluence, not by itself.
yep, yep, definitely, definitely. But we can
Yeah.
say that around the new moons, a lot of times high volatility happens for sure around any sign, whether it's full moon or new moon.
Yeah, I was just about to say either one. There's more volatility just because there's more people, um, in the markets.
Hmm.
We're affected by, a lot of people think astrology is crap, but it's probably the most real science that there is. If you're
Mm,
basing it off of the fact that, the moon cycle is 28 days, which means there should be 13 signs and, things like that.
yep.
Not just basic tropical. It's one
Yeah.
of the most accurate, it's the reason why way back, they used it. It's not just some new thing we came up with.
Hmm.
Um, Let me see. Share screen. So what I kind of want to talk to you guys about is the importance of knowing what to do when price goes up or price goes down, honestly. But in this market dump that we've had, knowing what to do. Um, a lot of people panicked, and what you never want to do is activate your amygdala, right? Which is, if I forget what the lady's name is. It's the seven circuits of the brain. If you guys are familiar with that, if not, look it up on YouTube. Um, that's the snake brain, right? And that's where the fear like gets activated. So you don't want to activate your amygdala ever, especially when it comes to money, finances, investing. One of the best things you could do is just not be emotional about it at all. That's where I've gotten to. The market goes up, market goes down. Don't hurt my feelings. You know, yields are high, yields are low. You go through periods of austerity and prosperity. That's the way business works, right? If any of you've ever been in business for yourself or even just working in a business, you know that. So that's true in this. This is a market, just like any other market. And when things go down, you need to know, hey, what am I going to do? And that's why, like I said, a lot of people panicking, capitulating really good assets for no reason. You know, one thing you always want to be careful about is the leverage. If you're using good assets as collateral and you're taking debt against it, you always want to be careful and use safe amounts of leverage, right? You don't want to get liquidated. You don't want to be a forced seller, right? Because that's what liquidation is. You're a forced seller. You don't want to be a forced seller. You want to have more assets, not less. So, yeah, just the importance of knowing what to do when things go down. A lot of times, doing nothing is the best thing, especially if you have a good cash position and if you had some debt and, you know, when things were going up and yields were good and you were paying down a little debt here and there, or you put some cash to the side when yields were good to pay down the debt. You know what I'm saying? Having that proper debt management and portfolio management. Yeah, seven circuits of the brain. Thanks, Kwaku. Um, so yeah, it's like I said, it's just about knowing what to do. And a lot of times doing nothing is the best thing you can do, is sitting on your hands. Like literally the best thing you could have done was 5 years ago, put $1,000 into Bitcoin and forgot you even had it, right? Like we all know that story. That's the best thing you could have done, which means doing nothing seems to really be one of the best options in, you know, investing and stuff. Um, yeah, so just never feel like you need to overtrade or you need to be getting in and out of positions, and just keep buying more assets. If you got more assets, you're doing the thing right. Can you guys see my screen?
Yep, I see it.
Okay, cool. Let me just swap this real quick. This is a simulation account, just in case you guys are like, "Ooh, shit." All right. Um, okay. So what I kind of just wanted to show you guys, using this simulation mode, is sort of the power of private banking or self banking, whatever you want to call it, in DeFi, but also generally speaking, whether you're using gold or whole life insurance, real estate, private banking or self banking can be done with literally any assets. You just need the assets. And DeFi is actually what helped me learn TradFi, right? Like this whole game is about assets. It's about collateral, right? When you sign a promissory note, you hand it over, right? Those sorts of things. It's all about collateral. It's all about assets. And like I said, DeFi and interacting in this is what helped me understand that about the traditional finance world. And in interacting with DeFi, I learned really the importance of having assets, right? Because if you have assets, you know that at any point in time you can go get credit. At any point in time, whether it's life insurance, gold, real estate, and crypto. Even now, JP Morgan, Chase, they're doing Bitcoin backed loans and ETH backed loans. But you could have been doing that for like the last 4 years on chain, right? And plus, you got to think about how are they custodying those assets? How do you actually trust that it's not being hypothecated? If you're doing it on chain, it's easy for me to verify that that's not happening. But like I said, I don't know how that JP Morgan thing works, but are you locking it up, or how do you ensure that they're not using your Bitcoin essentially? So yeah, really, I just wanted to show you guys, like, one, anybody can do this from anywhere in the world. All you need is internet access, right? And a lot of people focus on, oh, well, I gotta, get on an exchange and get crypto and all of that, when all you need to know is somebody who has Bitcoin or who has stable coins or who has ETH. And you can do the entire thing, no banks, no centralized exchanges. That's the first way I got in. But yeah, just the fact that right now today you could drop money in and earn 3.4%, right? And this is accrued block by block. Does it show it on here? It doesn't. Oh yeah, it does here. So on that, at this current interest rate, that would be $2,000 a month. I mean, $2,000 a year. Right? And then not only can you start earning instantly, but you can borrow against it instantly, issue yourself credit. And that is honestly one of the most powerful things. And then you also get to shop around just like at any other bank. Like, the other thing I wanted to show you guys was, where is it at? Oh, okay, yeah, like, if you know PayPal, they have their own stablecoin or whatever. So I could deposit this stablecoin instead and earn 1.7 plus 5, so let's just say 8% versus the 3.4 up here I'm earning. So you have the ability to shop around just like a loan or mortgage or whatever, and it's instant. Something else over here I want to show you guys too. For those of you who have ETH, switch to smart mode. Okay. For those of you who do have ETH, actually, let me say this. Let me go back to Aave. Okay. Not every stablecoin is created the same. Not every stablecoin is created the same. Right, so USDT, USDC, those are centralized stablecoins. They have a freezing feature where they can freeze your actual money on chain. RLUSD, same thing. PyUSD, same thing. Go does not have that. It's completely immutable and it doesn't even have like the function to even create that possibility. Do they have it on here? They might not. But it's very important for you to know what stable coins you're using and what can they actually do. Like Go is one of those that it it can't they can't freeze it. The Aave DAO has no control over who uses it or anything. Let me just go over here to stake real quick. And you can earn 6.4% on this decentralized stablecoin that nobody can stop you from having. Right? Because we know they can stop the money in your bank account. I don't know if any of you guys have ever had issues with your bank or your credit union or just using a debit card or trying to send money on Zelle and they asking for 30 different questions, right? But this, you don't have none of those problems. Nobody can stop you from transacting with this stablecoin. Like I said, USDC and USDT have a different risk. So my point in telling you guys that was kind of just to bring about talking about Liquidity V2. So if you have ETH and everything, this is probably one of my favorite ETH credit facilities. Because Bold is probably the most decentralized and immutable stablecoin in the way that they built it. Like nobody can do anything in the best way possible though. So that's just something to think about when you are using an asset that you value, like Ethereum, like Bitcoin, or what have you. You know, just thinking about also if you are holding stablecoins, which stablecoins are you holding? What could be done? Or like what powers does that smart contract have in it? Like I said, to freeze or stop your stablecoins from transacting.
Now I have a question.
Yep.
Um, with these with Aave, are you able to do Aave? Because I know on the Aave website they have you can do it on different chains, whether it's Avalanche or Arbitrum or Ethereum. Are you able to do the same with the protocol, the Aave protocol? Can you have it on multiple chains as well? Like, you know what I'm saying?
Aave?
Yeah.
Yeah. Yeah, you can have one uh wallet address on multiple
Mm,
chains,
okay.
right? I'm not gonna switch right now, but on multiple chains. And they can all
Okay.
have their own separate Aave accounts
Mm,
with their own Aave balances and debt and completely unrelated to one another.
but all with the same wallet.
Yeah, yep, on different chains.
That's crazy.
Yeah. And
Wow.
honestly, it's kind of, sometimes it is important to segregate um lending and borrowing or, segregate risk just depending upon what you're doing. Um but yeah, I'm trying to see. I might not have it up here. Yeah, I might not have it up here. So something else I did just also want to bring back around. I talked about this a few months ago, but it is live now, so I want to bring it back up. Also, because I don't see anyone else like online talking about this, and this is actually probably from a like I'm big on the tech. I don't care if your favorite influencer is bought in and he's pumping it to Valhalla. Like that don't have nothing to do with anything for me. Unless I'm just doing a quick flip or something, but for the most part, they don't have nothing to do with me. Um, so yeah, like I said, I don't really see anyone really talking about this. And from a technological standpoint, this is probably one of the coolest things, like with this potentially, it changes the entire equation. So let me just kind of TDLR, what is yield basis? Um, what's the page I want to show you guys? Okay, I'll do that while looking at this. Yeah. So first of all, yield basis was created by the same guy, Michael something, kind of crazy name with V's and whatever in it. Um, the same guy who created Curve. So, he already knows how to create stuff. He's, masters or whatever. I think he might actually have his PhD in physics as well. But needless to say, he's super. Yeah. 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 Give me 1 second, you guys. Um. Yeah. Give me 1 minute.
The name of the platform that she's currently on is called DeFi Saver. I just put the link for it in the chat. DeFi Saver, and she's in simulation mode, so you can basically try out the platform with fake money and see how you like it. So yeah.
Sorry about that. Yeah. So, uh, DeFi Saver is Oh, I just realized you guys couldn't even see what I was showing you guys yield basis. I gotta share that window. But let me just go back to this real quick. DeFi Saver is it's just an all around automation platform. They started off really more focused on whales, like larger accounts. If you guys don't know, kind of the aquatic terms of like, if you're at the bottom, you're like a plankton. Then you got a shrimp. Then you got like I think it's like an octopus, dolphin, shark, whale. In terms of like your portfolio sizing, it's also something in the Bitcoin community as far as like you know where you are in your Bitcoin, I guess accumulation. Um, but anyway, it was kind of more built for whales, people with bigger portfolios at first. But they really really redone it and made the UI much better. So if you guys are familiar with Instadept, Bully really likes Instadept. Um, it does basically the same exact things as Instadept. So we can go over here. Let's look at Shift, right? So I could swap the collateral of my. I could basically swap the collateral to another asset. The same thing you can do on a collateral swap is what it's called on Instadept. Debt, same thing. Um, this one just allows you to flip whatever your debt is becomes your collateral. Whatever your collateral is becomes your debt. And then this is Shifter. This allows you to refinance your position without having to pay back. So like, I actually don't know. Does Instadept have that feature to refinance like that? I do know to like take your position um out of Instadept, you have to pay back your loans, but I'm not sure if they have something like this as well.
I don't I
But
don't think they do. I don't think they have that.
yeah, that's what I was gonna say. I don't think they do allow you to refinance, which is probably one of the best things in my opinion is the ability to refinance because I don't have to worry about either losing collateral because I'm going to use collateral to pay back the debt, or shrinking my cash position because I gotta settle up this debt so I could, get into a different loan essentially. Um, and the interesting thing just about DeFi generally is that it really is just based off of the traditional financial system, but in um a much less a way that you don't need to trust the people, that you sign your promissory note and you hand it over, and they don't tell you that a promissory note is an asset and that you just gave an unrestricted signature. You know what I'm saying? Like, nobody's telling you this. Nobody's telling you that you're not, the in legis. You're the representative for the person. But when you're operating in DeFi, you kind of already know that because you can't own the keys. So I don't own the keys. I mean, you can't. Sorry, not the keys. You can't own the coins or the tokens, right? The only thing you can actually physically own or control are the keys. I can only manage, you know, the coins and the tokens. I can never own the coins and the tokens. I can own the private keys though, right? And that also has to do, I mean, like when you really just break it down, it just, all of it is interrelated, whether it's trust, DeFi, finance, all of it is interrelated because it all has to do with collateral. And, most people don't really know what to do with collateral. Um,
So basically, what you just said, if someone says, "Hey, give me your Bitcoin," or they're like, "Where's your Bitcoin?" Like, you basically like, "I don't have any Bitcoin." The correct question would be, "Give me your private keys," or "Where are your private keys?" You know what I'm saying?
Yeah,
Is that
exactly. You can't own Bitcoin. No one can ever own Bitcoin. No one can ever own ETH or stable coins or nothing. It's never in my possession. I never own it. It is property of the private key. The private key could be my property. For me, I do it as a trust property. I don't know. Owning stuff personally isn't the best thing to do. Um, yeah. And plus, like for taxation purposes, having a DeFi trust where the trustee is not operating off of um discretion, but is operating based off of the law, the contract, the rule of that trust. As far as it goes with claiming things and stuff like that, and how it's dictated for taxation purposes. It's just way more beneficial. Yeah, so I forgot what I was just about to say. Yeah, like a lot of people own their Bitcoin or cryptos personally or do it in their personal name, but You could set up a Coinbase account through a trust or an LLC, just the exact same way. Or, whatever, if you use Spritz Finance, or if you use Cypher HQ, or if you use Caleb and Brown, or if you use Gemini, all of them, you can use a trust account or LLC. Same difference. And like I was saying, though, it's all the same thing. Like in the traditional system, you need collateral in order to get credit. When you go to the banker, they give you an application. You have a account number. You furnish them your account number. You furnish them a signature in order to access and pull the credit from the account. Right? A lot of times you might even sign a power of attorney, giving them the authority to do things. So my point in saying that is you're giving them asset. You're giving them collateral in order to obtain the credit, which is the same thing you're doing over here. You're giving them an asset. Right? All these different assets that they accept, and they will allow you to issue credit. All these assets. And it's the same thing in the traditional system. Same exact thing. Alright, so just a little bit more about DeFi Saver. One, I like the UI better than Instadap, especially since they redid everything. And I like the optionalities that they have a little bit better, like the presets. And you can go down here and do a recipe creator. You can do your whole own thing. They allow you to use their flash loan automation contracts without needing to know how to make your own smart contract automation and tap into flash loans. They just allow you to use their infrastructure. Because if you guys don't know, the way that a collateral swap or a debt swap, any of these things are achieved, right? Because we know on the blockchain you have to have the money, right? You gotta have the money to do these sorts of things. So somebody does have the money and you're borrowing it in a flash loan that gets paid back in the exact same block, or really the exact same how can I say it? Like it's all executed at the same time, the transaction. So you wanna take this asset A and swap it for asset B and deposit asset B back over here, and it does it all at one time and then pays back this loan that you borrowed in order to do that. I hope I made that make sense. But flash loans are super, super powerful. And like a lot of people don't really talk about them. I guess more because it's more of a technical thing, but if you know how to use them, this is like one of the most powerful things out there in this market.
If you don't mind, could we go into Flash Loan a little more? Maybe even ask Perplexity about it, because I think that's very, very important to know for sure. Even me, I still kind of get it a little bit.
Yeah, so essentially there's a pool of collateral, or I shouldn't necessarily say collateral, but there's a pool of assets that's sitting unused, say by people who put stablecoins up on Aave or Compound and Morpho. So now there's like an extra, you know, let's just say 100 bill sitting around, right? And what happens is you want to complete a certain transaction, but you don't necessarily have the money to complete a transaction, right? So the best way really to picture that is the debt swap, right? Because if you want to swap your debt, if I have debt that's in USDC and maybe I want to do a discharge and the market's on a downturn, now I want to swap it to Bitcoin so I can cut my debt down some, right? You don't want to have to pay back your entire debt in order to issue yourself that same amount of debt, right? One, because you got to pay the transaction fees, gas fees. Obviously, if you're on, base or something, that's cool. But if you're mainnet, that's gonna eat you up eventually. And then the other part of it is, so where does the money come from that you're paying that loan back with, or that debt back with? Is it coming from your cash position? Are you gonna sell collateral to do it, which is crazy? So like I said, you want to complete a transaction that you don't necessarily have the money to complete, right? So does that make sense so far?
Yes.
Okay. So what the flash loan is going to do, remember, like I said, there's like an extra 100 billion just sitting around not being used right now. And what it's going to allow you to do is pull from that loan, pull from that pool that's just sitting there not being used, and take what you need to cover that particular transaction. And because you're borrowing, doing whatever it is you're going to do in between, and paying back the loan, all in a single transaction, all in a single block, you technically you borrowed the money, but you paid it back in that block. So you don't owe anything after. It's just the completed final transaction, if that makes sense.
Okay. Okay. Because normally it would be two separate blocks for the borrow or the collateral
Yeah,
swap and
so
debt.
let me kind of maybe draw it. That'll help.
Okay.
Um, and then we can ask Perplexity as well. Oh wait, I didn't share. You guys can't see. Am I sharing? Yeah. Okay. So just to kind of do it simply, let's just say you're using Aave and you've got, that's an ugly box. Let's say you've got 10, let's say you've got 10 ETH and this is lending. And you're lending that out and it's earning whatever ETH earns over there. Then let's do that. Let's do borrow. And then 10 ETH or 3, that's 30. Let's do a 30% LTV, that's 9. So minus, that way we know that's a borrow. And then actually the way they showed it is like minus, and let's say you're paying 5%. Okay. So kind of just to make this more simple and draw it, I think will help. So there's a pool, like I said, 100 bill, large. Right, and this is just underused. Right, so when you put your stable coins on Aave, maybe it doesn't actually get lent out right then and there. Nobody's borrowing, so it's just it's not being used, right? This is what this right here is representing. So it's just literally like a pool of the assets all together. So what happens is you can pull from this money to be able to turn this $9,000 USDC into let's see. Let's say I think that would be like point 0.1 Bitcoin. Let's just call it point 0.1 Bitcoin for this. You want to get it into point 0.1 BTC. And the reason why is not because you're going to get a lower interest rate. It's because you want to, do like a debt discharge. And you're hoping that Bitcoin is going to go down like, 20% like it just did or something, right? So in order to actually facilitate this without a flash loan, you would have to pay back this debt, then borrow or issue yourself a new credit line. New credit line. Let's see. New credit line for this Bitcoin right here that you want. And so that would mean you have to have 9,000 USDC to pay back, right? Cash on hand, or you would have to use part of your collateral to pay back that debt, right? And we don't want to do either, right? We want to have 10 ETH. That's what we want. And we don't want to, if you've got, let's just say you got 2K. Ooh, that looks horrible. 2K sitting in cash on the side. You don't want to use 2K of this and then part of your assets to pay down the debt. Now you don't have no cash and you don't have 10 ETH, right? That's a lose-lose. What we're looking for is a win-win, right? You want to perform the transaction you want to perform without having to come up out of pocket, you know what I'm saying, 9 grand, or lose your asset, lose part of your 10 ETH. So instead, what happens is you pull 9 USDC from here, pay that back, then new credit line happens in the same transaction. It opens up a new credit line for this right here in the same transaction, right? So think of that as you click approve transaction one time. You pay one gas fee. So it's all one, bundled up, right? And what that allows you to do is actually, like I said, perform this transaction without all the issues I said. And without having to do 2 transactions, double the gas fees, right? And double the slippage. So in this, you get to pull from here, pay back, and then in the same transaction it's going to borrow this Bitcoin, and then it's going to pay back this loan, right? And that's it, and it just does it all in one transaction. Now you got to get the math right to make sure you actually end up with what you need to pay it back. But the beauty of it is if you get your math wrong, the transaction just fails because it can't execute because there's not enough money, right? It does not balance in the books. That's the best thing about blockchain. If the books ain't balancing, that transaction is not going to execute. And so the way that flash loan essentially is going to work is that we have assets and we have liabilities. And there's 100 bill. You borrow your 9. I don't know exactly. I'm not going to write out that number. Let's just say 9,000 is the liability. And if in one transaction you can't get if in one transaction you can't get this liability to 0 and get the asset back to 100 billion, it's going to fail. If that makes sense. Let me actually draw it a little bit differently. Like it would be like 99.99, 9 billion, and you would be borrowing 9,000. So that's the first part. The second part is that you've got to pay that back and get this back to 100 billion and 0 liability, right? Where both sides of the ledger are making sense. So hopefully I didn't overcomplicate that.
No, that was good. That was good. And if you still don't get it all the way, we're gonna have this posted to YouTube so you can go back and watch it. But no, that was good. Thank you. Thank you.
Um, let me just go back to DeFi Saver real quick. I just wanted to quickly show you guys this automate thing. What I want to show you guys, like I was telling you about, excuse me, about knowing what to do when the market does what it's going to do, whether it's up, down, sideways, chopping, up and down at the same time, whatever the case may be, knowing what you're going to do. And as you start moving with larger amounts and you're executing, you're executing and you're using your assets as collateral and you are holding debt against those assets, using these sort of features, using these sorts of basically just like front end management automation tools, whether it's DeFi Saver or InstaDApp, can really save your portfolio. So I just kind of wanted to show you just this one, right? It automatically repays your position when price drops, and it automatically levers up when price goes up, right? Really, I just feel like that repaying on target price is kind of, super cool. Like if price goes under, X amount, 1,000, and repay certain percentage of the debt, right? So it takes the headache and the pressure off of you, and it makes your management much easier. So like I said, as your portfolio gets bigger and you are taking debt, just think about that a little bit.
But would you want to pay your debt back when the price when you're in profit, or would you want to pay your debt back when the market is when you're not in profit? You know what I'm saying?
Um, Pay your debt back when you're in. So it's kind of a dual question in a way, because the
Right.
first part is if you're accumulating yield, right, and you're in ETH USDC pools, you're in Bitcoin ETH pools, Aave ETH pools, and you're accumulating yield. you kind of want to, um, well, really, it really depends on your strategy, right? But the main thing is if you're accumulating yield on the way up, you want to, like, if you know the market is pumping and I'm getting ETH and collecting ETH, I'm going to hold that until it gets to the market gets to a certain point. And then I'm going to sell it. And then, um, that's going to be a part of the cash position now. And then based on that, I assess, I'm like, okay, this is where we're at in the market. This is how much debt I have. This is where the cash position is at right now. Maybe I should start paying down some debt. So, like I said, it's kind of twofold. It's more about if you are getting yield, how are you allocating that yield? Is it straight to the cash position? Are you delaying claims? Essentially longing the market, holding on to that ETH and waiting for it to go higher, longing the market. Are you, you know, taking 10% of that yield and just paying down your debt, period, right? Like I know some people who do that, period. They don't matter, it doesn't matter. They take 10% of whatever they yield they get, they pay down debt. So the main thing, like I said though, is your yield. The second part of that is, are you doing debt discharge? Most of you guys, I would assume you are. So if you are doing debt discharge, then when the market is up, you want to go in cash so you can lock in your gains. As the market takes that turn, that's when you want to look for a confirmation on doing your debt discharge. And that's also when I would probably, like the other thing is, let me say this too. I'm kind of going all over the place, but the other thing is as well, like say you want to manage and keep a 30% LTV. And because prices have dropped, now your LTV is at 38 instead of 30. Well, if you have a good cash position, then you should take that and pay down that debt to get yourself back to what is a comfortable range for you. So it's just kind of, there's a lot of factors, but the main thing is if you are going to do debt discharge, I still pay a little bit down before I even get the confirmation on the discharge, because I may not get that confirmation to start doing a debt discharge, right? So I'd rather just know that I paid down 2,000 on my debt, and if it bounces and goes up from here, I'm still cool. And if it goes down from here, cool, then that's my confirmation on the debt discharge. So it's kind of not one size fits all though. But the best thing to do always is keep a low LTV, know what your liquidation price is, and manage your debt efficiently for you and what your goals are in your portfolio style. But it's a skill. And like I said, it's why it's not about buying a coin. It's about debt management. This is literally what rich people do. Right? Everybody want to talk about generational wealth. People like to talk about financial literacy, and those people don't read no financial laws. Right? How do you financially literate? Certain questions you gotta ask. But yeah, this is what rich people do. They go get life insurance, and you can go to the bank. A lot of people talk about getting a policy loan, but that stops the compounding of your life insurance policy. And if you go to the bank and say, I have, $3 million death benefit life insurance policy, and it has $500,000 cash value right now, they'll give you a loan based on that. And then your life insurance policy can keep compounding inside. So my point in saying this is, again, it's all kind of the same Legos, the same money Legos. DeFi just makes it even more Lego like, if you guys get what I mean, and the ability to, literally, where's it at? So we got some ETH, some USDC supplied. We can generate debt against the collateral. USDT, 10K. Like, this is literally private banking. This is what rich people do, right? And or really wealthy people, I should say, because people be rich, but they don't have this type of knowledge or information. But more to the point of what I'm getting at is that this is the same thing in TradFi, this in DeFi, but it's a little different and it's better. And learning this will help you learn that if you don't already know it. But if you already know TradFi, then you should be able to come into DeFi with a real good understanding. And the importance of having assets, because that's what matters in this system, right? People say cash is king, but that's not the truth. Cash flow is king. Assets are what you want, right? Assets are what you want because assets can be collateralized at any point in time. Like I said, life insurance, gold, silver, platinum, art, you name it, rubies, everything is really an asset. Cars, because you can go get a title loan on your car. That's the same thing as putting Bitcoin on here and issuing yourself collateral. Issuing yourself debt. The only difference is now you're in control, right? And also that, your asset is generating interest while you have a debt position against it, right? And there aren't too many places where you can do that, where you can generate a yield and the debt that's accruing against it doesn't sort of leak into that interest that you're actually the positive interest, right? It's not eating into that positive interest. Like I said with the life insurance policy. Yeah. But just moving on.
Hold on, I have one more question. One more question about that. So I was once told that it's ideal to borrow during the bear markets because normally during the bear markets, the borrow rates are cheaper. So if that's the case, would it also be more ideal to pay your debt back in the bear markets because you're paying back less? Because like as you're, you know what I'm saying? If the
Yeah.
borrow rate is cheaper, then your debt amount is cheaper as well.
Yeah.
Is that
Yeah, it's a pretty good rule. It's a pretty good rule to follow to borrow in the bear market. Because the rates are lower, that is true. The one thing about it is though, it depends kind of like one where you bought the assets and what your more mid to long term strategy is. Because say you bought Bitcoin at like 60 grand, right? And then it ran up to double that. So now you had double your money. So if you had borrowed at the bottom and you were like, there's no way it's going back to 30. So you took like a 50% LTV. You got like 30 bands out of that. You ran it up. It doubled. Well, is the one thing I always say is I still like to take some chips off the table when it goes up. So I always kind of calculate that into my formula, if you will, is that even if I'm borrowing while the rates are down, like there's nothing wrong with that. I think that is a really good rule of thumb is to borrow while the rates are low. Right? The other thing you also have to remember though is that if you're using Aave, the rates are variable. Now, if we go, well, Liquidity V1, there's no interest rates, there's just the fee. And Liquidity V2 is a let's do 10. Okay. Can you guys see my screen?
Yep, I see.
Okay, so in Liquidity V2, you can see like I'm choosing what I want the interest rate to be. So I can pick this low, 0.5. I can go all the way up to 25. That's what I wanted to do. Right? So if you pick something with a fixed interest rate where you could have a fixed interest rate, yeah, perhaps, perhaps. Um, but yeah, that's just always kind of one of the things to remember is that most of these that you're going to be borrowing on are going to be variable interest rates. And what that really means is yes, while the rates are low, you're going to be accruing less interest. So that's smart. That's good money decisions. But at the same time, that doesn't mean you're always going to be borrowing at 4%. So you should be still accounting for the fact that it's going to go up some. Um, and then borrowing on the down, I mean, you said paying it back when the rates are lower. Um, I mean, paying it back is more of like when prices go down, I'm more worried about like if we're going into a bear market, I'm more focused on a discharge than paying back debt. Like paying back debt is more of an intern market, and when things kind of first start getting choppy, that's when you're like, okay, let me really manage my debt because things could take a 20-30% nosedive at any point here. Um so yeah, like I said, it's still kind of just um person to person. Still kind of person to person, but like yeah, a general rule, yeah, borrow when rates are low and pay back that debt. I kind of pay it back when it's higher, so like when the market starts moving, that's I kind of start paying back because then the rates go up. So I want to accrue less interest. So I might just drop, $10 a week or, every other claim, I might drop a little money on the debt.
No, that makes sense. It's kind of like the inverse rule of borrowing during when the rates are low and paying it back when the interest rates are going up because you don't want to. Yeah, yeah, that's cool. That makes sense for sure.
Yeah. And then especially when you couple it with um going into cash for kind of capitalizing on whatever gains you have on the way up, and you see them rates going up as well, and now you have more cash in your cash position. You can throw money to pay down debt, and it actually makes financial sense. So always just make sure it makes financial sense. I mean, paying down debt is a good thing generally, especially if it's gonna make you a forced seller. Like I said, if it's gonna hit your liquidation price and you become a forced seller, always pay back that debt. But yeah, I didn't really have much else for you guys. I just been looking at some liquidity pools. Anybody have anything they kind of want to share or any questions or anything? Any protocols you're looking at or yields or anything?
I definitely want to put some Solana on Meteora. I know you were talking about it.
Oh yeah, let's check on that because I never took the money out, even though I was because I was like, oh, this is gonna go down. But then I was like, it's like $2, so
Mhm.
I'll just leave it in for the experimental purposes.
Yeah,
So let's just check on that. As you guys can see, liquidity is down. Liquidity is down. Obviously, I'm not in range. Um, we're at the bottom of my range, which means I'm all in Solana, as you can see, right? Triple ones. You can see the fees, 4 cents each. I could claim
but you're not
these.
earning anything right now because you're not in the range, right?
Right, correct. I'm not earning anything because I'm not in range. Um, yeah, I'm not gonna claim those fees honestly, but yeah, you can see that's the bottom range is 155. And this was a really tight range, obviously, 155 to 158. But I had just did it just kind of to show you guys. But yeah.
And would you say this would pay out APY or more than like just staking your Solana or something like that?
A liquidity pool? Yeah, of course. I
Yeah.
mean, this is what I'll say. If you have assets that are inflationary tokens and you're not especially, let's go back to DeFi Saver. So, okay, because I'm like, why can't I see anything? So, if you have assets, like if you have ETH and you're putting it in and you're using it as collateral basically, it should really be in Wrapstake ETH or WETH or RSE, one of these liquid staking ETH derivatives. I'll say, I'm not just gonna pick out each and every one of them, but one of these liquid staking ETH derivatives. And the reason why, and not just ETH, Solana. Let's go to. Hopefully my VPN is on. I will show you guys Camino. Camino. All right, I'm about to find out. Is it on? Yes, it is. Season 5 is now open. Okay. So. Oh, it's because I'm over there. I need to be lend. Give me 1 second. I don't know how to find. It had this page where it just showed, I guess liquidity. Yeah, here it is. So, I mean, these are LPs, but the point I really just want to show you guys is that you got Jito Soul, you got Bonk, you got Marinade, you have all these various different soul staking derivatives, wrap derivatives, right? We can go to Jito, see what they're paying, staking. So if you have an inflationary token like AVAX, ETH, Solana, Sui, but Sui's a little different because of the way the staking mechanism works. HBAR, just these various tokens that are especially hyperinflationary like Solana, you want to be staking because if you're not staking, you're just losing money. It's the same thing as the dollar. Okay? 6% Sol is being printed every year and you're not getting any of that piece of the pie. So you are being well, yeah, you're being inflated on at 6% a year. So it would behoove you, you know what I'm saying, to it would behoove you to stake, right? Like, why hold your soul in spot? Like, if you're actually going to hold soul, like if you just got it in a wallet or something, or if you wanted to throw it on Camino and lend it and borrow against it, right? You should do that in some sort of staking, liquid staking. Again, like I said, the 6% inflation, right? If you could stake your dollars and earn the inflation, wouldn't you do that? and still have it liquid and be able to collateralize it. So that's what you want to do. In most wallets, you can stake in wallet. So that's the other thing. It's super easy. But yeah, whether it's Jito or Marinade. Marinade was like the first one when it came out. This is what I did. Marinade Finance. Yep. So they're actually a little bit higher than Jito Soul. So that's an interesting arbitrage there. But yeah, you definitely want to stake any of those assets. It just doesn't make sense not to stake if they're being inflated at 3%, 6%, or what have you a year. And by staking, you can earn that inflation and continue to have the same amount, or not same amount, but like a par value. If you were doing like a par value kind of look at it, you still have the same value of Solana that you would have had in a year's time because you're staking. But if you're not staking, then you don't, because there's more Solana in circulation and you didn't get any of that. So yeah. But yeah, like I said, that's the main thing. I just been looking at some LP positions. The main things in DeFi, like I said, yield basis. Nobody is talking about this. This is literally about to solve impermanent loss. Like you're earning 30% on Bitcoin. Let me go back here. Damn, and look, they're all filled. And look how much each one of this is like a $45 million cap. And people are waiting to put their money in here. Which one says there's a need for a real Bitcoin yield, and this is it. So yield base is basically just I'm not a super math genius like Michael who created this, but from my understanding, it is essentially going to get rid of impermanent loss if it works. Right, I should caveat it with that. If it works, it's going to get rid of impermanent loss and just allow you to earn the yield. So this is if you want to earn it in yield basis token, and then this is if you want to earn it in Bitcoin. You know what I mean? So this is a hell of a yield. And that's one thing. Another is the Uniswap proposal where they might be turning on the fee switch and turning off the front end fee, which is really going to shake things up in the DEX space. Like really, really shake things up. Uniswap could lose some market share. Things are going to get really, really, really interesting if that occurs. Yeah, that's really about it though in DeFi. Anything else? Anybody have any questions?
All right. Well, if there are no questions, I would like to propose two, in a way, like activities that we can do in the month time going into the next call. So I will highly encourage everyone to go to DeFi Saver and make a simulation account and just click some buttons, just play around in it, click some buttons. And I think it'll be pretty cool if, you know, next time we come in, people can share their screen and be like, hey, this is my DeFi Saver account. I was able to do this. I was able to earn this collateral. I was able to do some debt swaps or whatever. Just play around with it. And even if you blow your account, get it liquidated, whatever, it just do something. You know what I'm saying? I think that would be a cool activity that we can all share with each other. And if you want to add this on, if you don't already have a trading view chart, I would suggest just literally, I mean, if you don't have a trading view account, just literally Google uh, a, any stock, any crypto chart, and just find a picture of it and draw out the support and resistance. You can literally do it with a pencil and paper, or you can do it like on on your phone, like markup or something like that. You know what I'm saying? Just think that would be something cool because I want this to be interactive, and I know I know we get y'all getting a lot. I gain a lot. We all getting a lot from just hearing the knowledge and everything like that. But it's nothing like actually applying it and being able to share what we're doing with each other and holding each other accountable. You know, so just proposing that out there. Tap in with DeFi Saber. Start a simulation account. It's very simple, and then you can just draw some support and resistance with any chart, So yeah, yeah. How that sound to you? How that sound to y'all? Just let me know. Y'all with it? Put in the chat. Let us know. Yeah.
Yeah, that sounds good. I definitely would say play around with DeFi Saver, make an account with some crazy number on it, like, a million ETH or something, you
Yeah.
know, and just, mess around and click buttons, like you said. It kind of just opens your mind to what's available and what can be done and what is being done actively right now. Like DeFi Saver was my intro into like what could really be done in crypto and DeFi. Like I messed around with Aave, all of this stuff when it first came out, but doing this in simulation mode opened my brain to all of the possibilities in a different way. So yeah, definitely. And yeah, look at the charts, just naked charts, nothing on it, just draw some support and resistance lines. If you want to get the trading views, is the best time of year to get one. They have the best deal. Um, yeah, but you can just do it on a free account and just look at a regular candlestick chart, like Kwaku said, and just chart support and resistance lines. Because honestly, levels are what matter the most. Then moving averages, fibs, um, and then you have your momentum and volatility indicators. But that's really what matters the most is that support and resistance. Because you got to think that's what everybody else in the world is looking at too.
Even the AI uses support and resistance too.
Exactly. Exactly. The AI is no smarter than us. It's doing the exact same thing. Yep. But I didn't really have much else for you guys. Um, just don't get shaken out of the market. Don't capitulate. Don't be a forced seller. Sit on your hands more than anything right now. Unless you're gonna buy more assets, this is good prices to buy some assets at, especially some cash flowing assets. Um, I was looking at doing another 2,500 lock on Arrow to get the flight school bonus. Trying to get as much VE Arrow as I can before Q2, before the merger. Um, more Bitcoin, close as 80 and 90 as I can get. I'm gonna take more of that. And yeah, just buy more assets, honestly.
What's that coin called? You said called VE Arrow.
Yeah. Why is it still up here? Being a little buggy. Okay. VE Arrow. Uh, What am I doing? Not Spark London. Aerotron. I don't have it bookmarked on this one. Where's the link? Let me just go to CoinGecko. Give me 1 second. I just gotta get the link. I don't have it bookmarked on this profile. Oh yeah, I think I have to use their other domain. Give me 1 second. Girl dot drum dot e dot lima. One thing I will say, it is important for protocols, projects, DAOs, protocols, really, in particular, to have a decentralized front end. Like it's actually hosted, not using centralized servers. If you guys notice, like when Cloudflare and a lot of that stuff goes down, how supposedly, DeFi protocols. Can you guys see my screen, by the way?
Yeah.
Okay. How supposedly decentralized protocols, their front ends go down. It's like if you were actually decentralized, you would have a secondary front end. So my little rant, what you want to do is see if whatever website you're on has mirrors and has decentralized. You guys see that? And you always just want to bookmark at least one of these. If they do have one, bookmark at least one. All right, so it's still gonna make me connect my wallet. It's not picking up this wallet. What's going on? Always back up your seed phrase. Just ignore that, y'all. This is a test account, so it's all good. I threw some bread on there. Let me go back. Let's see. Connect. It's not coming up for me.